We received a question from Carlos and Lydia in Doraville wanting to know, how does their immigration status affect their ability to buy a home? They really want to be first-time home buyers, and they want to raise their kids here. And I love that, because for me, that's the American dream. I know that's cliche, and I know people think, well, homeownership is not the American dream, but it's part of the American dream if it's not the entire American dream. So you don't really need to necessarily be a U.S. resident or a citizen to buy a home here in the U.S. Even individuals without documentation permitting them to live and work in the U.S. are free to buy property and become homeowners. In fact, according to the Migration Policy Institute, more than 3 million of these individuals living in the U.S. are already homeowners. And the Institute on Taxation and Economic Policy reports that this group contributes $3.6 billion with a B in property taxes each year. Non-U.S. citizens are allowed to buy property in the U.S. regardless of whether or not they have legal documentation permitting them to be here. This means that foreign nationals, visa and green card holders, and even those who have entered the country unlawfully can buy a home here in the U.S. Again, as I mentioned at the beginning of the segment, people who are working to establish permanent residency, and I would hope that everybody who's in the list of buying homes is in that group. My guess is that's not the case. This process can take up to 10 or 15 years or longer. Getting a loan as an immigrant can be challenging depending upon your residency status and the type of documentation you have. To get a conforming mortgage, and a conforming mortgage is a mortgage that conforms to Fannie Mae and Freddie Mac's underwriting guidelines. Fannie Mae and Freddie Mac are quasi-government entities, and they are here for the specific purpose of providing liquidity to the mortgage market. So you get your loan from Bank of America, Wells Fargo, local bank, and the bank then sells the loan to Fannie Mae or Freddie Mac, and they sell it off on the market and let people buy shares all over the world. To get this conforming mortgage, which is what most people think of as a traditional mortgage, you'll need to have a Social Security number or an individual taxpayer identification number, or an ITIN. You'll also need documentation showing you're authorized to live and work in the U.S., such as a work visa or a green card. In terms of credit history, as with any loan, lenders will need to look at your credit history to make sure you will responsibly manage the loan amount you're looking to borrow. Income verification, lenders will also look at your income and verify that you have consistent and stable earnings with which to make your monthly payments. There are down payment requirements. Usually you need a down payment to qualify for a mortgage, and sometimes the more you put down, the better the loan terms you can get, and it certainly is that way with non-U.S. citizen loans. If you are a non-U.S. citizen and you're listening to this show and you want to know what are my options available for getting a loan, well, number one, you can get a conventional loan, which we just talked about, but you'll need a Social Security number, individual taxpayer number. You can get an FHA loan. An FHA loan is an option that's insured by the Federal Housing Administration, a branch of the U.S. government. These are options if you're a non-permanent resident alien with authorization to work in the U.S. FHA loans require at least 3.5% down and a 580 credit score. They go all the way down to a 500, believe it or not, if you can make a 10% down payment. Third option is VA loans. To get a VA loan, you'll need to be a U.S. military member, veteran, or married to one. These loans require no down payment and have no official credit score minimum, though most lenders require somewhere in the 640 range. I've certainly seen them approve less. And then your last option for mortgage types is a ITIN, an individual taxpayer identification number loan. The ITIN mortgages allow borrowers to use their ITIN, so they apply for a taxing entity number, if you will, instead of a Social Security number. These are given by the Internal Revenue Service and allow those who are ineligible for a Social Security number to file and pay their taxes. They tend to be pretty expensive for borrowers. Many ITIN lenders require down payments of at least 20%. That's correct. And ITIN mortgages are often significantly higher compared to rates on conforming mortgages. Yes, because I think the lenders believe there's more risk. Sometimes people without a social security number, they don't really care. They just want to own a house. They want to own a house and they want to own it here in the U.S. So here are the steps to follow when applying for a mortgage if you are a non-U.S. citizen. Number one, find a lender. Find an experienced lender or loan officer, maybe a real estate agent, to help you find the right loan offer. Make sure you have your documentation in place. Talk to your loan officer about what documents you should have ready and how to submit them. You need to understand the loan terms. This means the interest rate and the payment and the closing cost and the fees and all the other features of your mortgage that will impact your home purchases. If you have a taxpayer identification number loan, they're not subject to the same rules that all other mortgages are in the United States. So there could be prepayment penalties. There could be other things. So you need to, if you're going to get a loan and you're not a U.S. citizen, you probably want to make sure you're working with an expert who can explain it to you. The challenges for non-U.S. citizens are paying a higher interest rate, being required to make a larger down payment, having limited loan options. If you don't have a social security number or a taxpayer identification number, you can't have a conventional loan or an FHA loan. So tips for non-U.S. citizens to improve mortgage approval chances. Number one, build a strong credit history, which everybody should be doing anyway. Number two, save for a larger down payment. Number three, seek professional advice. Now, when a non-U.S. citizen buys a home and then they sell that home in the U.S., they are subject to what's called FIRPTA. Bless you, Cleve. FIRPTA. That stands for Foreign Investment in Real Estate Property Tax. And what happens is when they sell the property, the buyer, and this is crazy, but the buyer of the property is responsible for withholding 15% of the purchase price and sending it to the U.S. as the buyer. You don't actually have to do that here in Georgia. The closing attorney will take care of that for you and send that money in. So, yes, you can buy a home if you're not a U.S. citizen. If you sell a home as someone who is not a U.S. citizen, you're going to have to pay 15% withholding, whether you like that or not.